Sandeep Jesha, Chief Executive Officer of Samriddhi Capital. Sandeep, morning. Thank you for joining us. Sandeep, characterize the market environment for us. Globally and locally, markets are stuck in a range.
Yeah, well, that's right. I mean, we've been between this 51 to 54, 5500 for some time. In fact, the last time I was on your show just before the budget, and I'd mentioned that we should be looking to take some profits ahead of the budget, and the market did correct from above around 5400 to below 5200. So, in this environment where we're seeing that there is a bit of a government gridlock. We've not even had a petrol price hike, forget diesel price deregulation. I think one of the things that can change this gridlock is if we see something happening politically. I would note that the Trinamool Congress has given a 15-day deadline for a package. And if there is a quid pro quo and we actually do see some non-controversial reform taking place post the passing of the finance bill, then that could give us some upside. And if nothing happens, the downside is actually protected because there are a lot of corporates who find that there is a lot of value in listed companies today. I mean, if you look at them from a realizable value of assets or even from a replacement cost perspective, so there are insiders as well as long-term investors as well as corporates who are willing to buy, finding value in Indian businesses at lower levels. Or of course, something happens, something changes globally, where we either see a euro quake or we find there's much more liquidity being thrown around, and because of that, bond yields actually in Europe again begin to come off. So one of these things could actually change, but obviously the risk remains that if global cues deteriorate significantly and nothing happens locally as well on the political front, then we risk seeing a sell-off below 5,000 as well.
Sandeep, hi, morning. In the near term, though, considering the listless market that we are in, do you think increasingly global cues are going to take precedence? And considering we are getting comforting signs this morning, you have the dollar, which continues to remain the 80 mark. You have crude as well, which hasn't rallied quite significantly from 118 levels.
Yeah, well, I agree that, a slowdown in China is, of course, good for us, even if it means that in the very short term, global markets get rattled because of growth concerns. I would tend to agree that global cues are beginning to get more important, perhaps except only for political, what could happen on the political front. Though as of right now, there's absolutely nothing happening. And even if you were to look at the quarterly results, which are expected to be very poor, I mean, if you adjust if you strip off SBI's earnings from the Sensex, you're going to see a decline in Sensex earnings. But I think it's quite likely that the worst in terms of quarterly results is perhaps behind us, and that last quarterly results were perhaps the worst, whether it's in terms of margins, whether it's in terms of earnings downgrades. I think the worst seems to be behind us. But, as with everything else in the market, the rate of change is very slow. I mean, if you look at, the policy, the policy paralysis curve, I mean, that bottomed out even before December 2011, but there is no momentum there. It's just gone flat. If you look at earnings, probably the worst was in the last quarter, but nothing has happened to really change that. I mean, it's still going to be poor results, so we're not seeing a strong uptick there. So in this environment, I agree with you that global cues and global flows will be fairly important.
Sandeep, so what is exactly driving Tata Motors? JLR numbers, hopes, expectations, or now it's pure momentum?
Well, the earnings momentum is fairly strong. The volume growth is still fairly strong. I mean, there were some concerns whether, Tata Motors would continue to be able to come up with new product launches after Evoque. But, it looks like they do have more products lined up on the Jaguar, under the Jaguar brand name. So, given that the growth momentum is strong, I think there are enough investors who would be willing to buy the DVR, which is still at about 3.5, 4 times. So, as long as the volume growth is in place and by and large, volume growth in autos tends to be one of the biggest determinants of stock price performance, as long as margins hold up. And in Tata Motors' case, so far margins are also holding up. And perhaps there was also a fear of a slowdown in China, which it looks like for now Tata Motors is able to ride that. So if the stock still remains reasonably valued, of course you have to look at global auto valuations and not compare it with local auto valuations because, Tata Motors is now a global company. But I suspect that there is still some room on the upside left as long as we continue to see these strong volume growth numbers.
Sandeep, just want to quickly get to you on the cement pack. And does it seem like a lot of concerns regarding pricing as well as supply still persist? And would you be negative on the space then?
Well, I think seasonally the cement sector is getting into a soft patch because this is typically, as we get closer to the monsoons, is going to be a time when we'll actually perhaps see cement volumes as well as prices come off. I think except perhaps for some of the cement mid caps, there really isn't any real value at a time when you're actually looking at the infrastructure or the core sector of the economy coming out of a hump, coming out of a low. Cement valuations are anywhere but at trough valuations. So from that perspective, the cement sector doesn't look very exciting. At the same point of time, I would like to give this rider that even though the mid caps look cheap, typically you will see mid caps do well even when the large caps do well. I mean, it's rare to find that large caps are falling off and mid caps are doing well. So I think that's perhaps the rider here. So as far as cement is concerned, if you're a longer term investor and you see corrections, you could be looking to buy, but perhaps your portfolio might be tilted more towards the mid caps and the large caps.
What are expectations from TCS? Because Infosys has disappointed and HCL Tech has surprised.
Well, I think TCS might not be able to give the same stellar performance that we've now begun to expect TCS to do over the last couple of years. But at the same point of time, I don't think TCS's performance is going to be nowhere as bad as Infosys. Obviously, Infosys is not, to my mind, facing client-specific issues, but there is a company-specific issue in terms of internally what's happening with the leadership and the vision and the growth strategy. So from that perspective, TCS is of course guided that there is a bit of a slowdown. So I would be inclined to believe that there might be a marginal decline in profits on a sequential basis. But my hope is that there is nothing really to worry about. I mean, the best of companies will have a few bad quarters. And obviously, there is a bit of a slowdown in tech spend globally, especially in the US as well. So and in Europe, actually, it's really HCL Tech which has been gaining a lot of momentum because, with their new acquisition, their strategy of actually paying top dollar for some of the front-end marketing guys. But I would expect that TCS would be somewhere in between HCL Tech and Infosys in terms of performance, closer to HCL Tech.